Hello guys, it's Etm Fx, and I'm going to go over how to backtest correctly. What is backtest? It's going through historical data via the replay button. So to start things off, we're going to need basically background information on the variable that we're backtesting. So how we're going to do that is going to go to our Forex calendar, and what we're going to look for is a red folder. And we're going to backtest that day and try to build a scenario or at least a little bit of clues leading up to the time that the red folder is going to occur, right? So let's go to, you basically want to go a little bit further. You don't want to backtest something that's fresh on your mind. So let's say today's Thursday, and you don't want to backtest something that's in the past 3 days because you obviously have a fresh memory of what occurred this past week. So let's go to the 1st of March. So we have two red folders on the 1st of March. We have a 5 a.m. GBP news, and we have a 10 a.m. USD news. So what we're going to do is go to Euro USD. Why Euro USD? Because it crosses with the USD pair that we know there's going to be news at 10 a.m. So what you're going to do first is we want to go to the 1st of March. But how are we going to go to the 1st of March? We're going to shrink the screen. Why do we shrink the screen? So we don't cheat. So we don't see how the data is playing out. Where's the 1st of March? 1st of March. Okay, so now you can expand. What can we see? We can see basically a downtrend. Overall, it's definitely a downtrend. So let's just focus on the intraday aspect of things for right now. Okay, so it's 3 a.m. Let's get closer to the 6 a.m. mark. 6. So what do we see here? 7, 8, 8. So yeah, let's start building our frame on the 8 o'clock. So first thing you want to do is you want to check the volatility calendar, which is the calculator. And look, so usually do 4 weeks, like I stated in previous videos, but in this instance, since we already went back almost 2 weeks, we're going to go for 8-week average. So what is the average pips / points Euro USD moves on a daily basis? 88 pips. That's the average range of Euro USD. So what are we going to go here? We're going to measure we're going to measure how many pips this pair moved so far during this day. It moved 126, so it exceeded its average daily range. And like you guys know from previous videos, this equates a reversal. And when price is exceeding the average daily range, you're not looking for a continuation anymore because chances are price already maxed out its average daily range. So now that we know we have a down bias, a bearish bias. And of course, you got price been dropping for almost a month now. So that's even more confirmation. But for right now, let's focus on our intraday. So let's go to the 15. So what do we see here? It's 8:45. So news would be in an hour. So let's play off a few candles and see what it is. But for right now, what I can see is an institutional candle that's showing a little bit of reaction. But remember, guys, we want to go bearish. So you see, price used up this candle, but it's still not finding enough strength to continue up. So what we're going to do next is replay and get to the 10 o'clock mark. 9:30, 9:45. So as you can see, price is trying to go up, but you can tell that this is a failed institutional candle. So one scenario you could do here is you can go short. You can go short post the reaction, get a 1-to-1, maybe even target this level right here, which is our previous base right here. And there's a lot of liquidity under this base. So you can maybe even target this area. And your stop loss would be right above your exhaustion candle right here, which failed of this institutional candle. That's one way to do it. You could probably look if price reacts from, yeah, let's see our premium and discount levels. You can take a bounce right here. So let's say it's 9:45 when the 10 o'clock candle opens. If price comes up right here, uses the 50% mark, you can get into a sell here. So basically, you can get into a reaction sell, or you can get in a momentum sell. You can get in a momentum sell by trading right through the institutional candle and targeting liquidity right here, or you can wait for price to go up and sell at the fair price value right here. So that's just two ways. It's nothing specific. Um, this is just the way you want to backtest kind of your strategy, even if you trade differently. Basically, you want to check your calendar, and that's one of the most important things. You want to check when the news is, because that's probably the best time you can trade. And then secondly, you need to check your you need to shrink the chart so you don't cheat, so you don't see where price is moving. And then you can kind of start going into your setup, whether it's checking your volatility calculator, just looking at your setup and trying to build the emphasis on why you should continue with your plan. So let's see. So 9:45. So the next candle should be 10 o'clock mark. Boom. It would have worked both ways. If you would have took a sell, at the 50% right here, you would have got a good entry. You would have got a zero drawdown entry, and price would have continued down. Or if you would have used the momentum, you would have been inside the trade, and price reached its base.